Hi, everyone, and welcome to today's webinar, Managing Exempt Sales 201 Advanced Strategies and Best Practices. My name is Ashley, and I'll be your host for today's webinar. Today, we are covering nexus implications and common exemption rules, protocols for expiration management, practical strategies for audits, and how Avalara can help. But before we get into that, I just have a couple housekeeping items. First of all, a friendly reminder that Avalara cannot provide legal or tax advice. Please take a moment to review the Safe Harbor policy on your screen while I continue with some additional housekeeping. We are recording today's webinar, so if you want to listen to it again or share it with a colleague, you'll receive the recording later today. The console you're looking at can be customized. Feel free to move or resize the windows. Slides can be resized by dragging the bottom corner or by downloading the PDF slide deck. The additional resources contains a lot of great related resources, including that slide deck. There are several ways to engage with presenters and fellow attendees today. First, if you have any questions, you can submit them using the Ask a Question box. We will try and save time for Q&A at the end of the presentation. You may also submit webinar troubleshooting questions there. Second, you can join our attendee chat. You'll click the icon along the bottom of your screen with 2 chat bubbles, and the attendee chat will pop up. We encourage you to introduce yourself, network, and discuss today's topic. So to kick off the discussion, drop in where you are calling in from today. I am calling in from the Midwest. Third, you can react to the presentation by clicking the emoji icon and reacting. We are offering 1 CPE credit for today's presentation for those looking to receive CPE credit. Please note that we will ask you to respond to 3 of our 4 poll questions. The poll questions will pop up on your screen for a limited amount of time, so please make sure you're ready to answer when the question appears. Please do not split or tile windows on your computer, as this can affect the placement of the poll question. We've also heard from past attendees that the poll questions might not display on mobile, so if you are calling in on your phone, please try and get to a desktop or a laptop. You must also attend the full 50-minute duration of today's webinar. Once you have met those requirements, your certificate will be available to download in the Earn Certification box on your screen. You'll click the icon to access it, and you'll also receive the certificate in a post-event email if you don't get a chance to download it during the webinar. Unfortunately, we are unable to provide CPE credit to those who have technology issues that prevent you from qualifying. So if you do experience an issue, please reach out as soon as possible using the Ask a Question box so we can document the issue. All right, let's meet today's presenters. First, we are joined by Andrew Quirk, Product Solution Consultant at Avalara. Andrew, can you take a moment to introduce yourself?
Yes, thanks, Ashley, for having me. Good to be here, everyone. For background, been at Avalara over 10 years, so been in this space for over a decade now. Had a few roles here, currently as a consultant. It's my role to, make sure our exemption certificate management solutions align to our customers and business needs. So that's my role, and happy to be here to talk about topics today.
Thanks, Andrew. We are also joined by Matt McNeil, Director of Technical Consulting at Avalara. Matt, can you please introduce yourself?
Yep. Hello, everyone. Like Andrew, I've been here a long time. Probably about the last 25 years of my life I've devoted to just exemption certificate management. So started out doing consulting, worked at a small firm. We ended up building a piece of software to assist us. That grew over the years and eventually became the Avalara exemption certificate management software. So I've been doing different pieces from programming to support to technical consulting to just about anything, from implementations, and work with a lot of different clients over the years. So you have questions, hopefully I can answer whatever you've got. So look forward to talking with everyone.
Great. It's nice to have you both here. Before we jump into the presentation, I do have our first poll question. You should be seeing that popping up on your screen now. And the question is, how many exemption certificates do you manage? And we have several options for you to pick from a few to a lot. For some of these longer lists, you might have to scroll down to see the submit button, but make sure you make your selection and then hit submit. And we'll give you just a few more seconds to do that. And then we'll look at the polls just so we can see what the attendees are working with before we get started. Okay, we will show the results now. So it looks like a lot of people are managing 0 to 50, and then we have another big group of people that are kind of in the middle with around 100 to 500. So, and then quite a few with over 1,000. So good range today. So thanks for answering that first CPE poll question. That is all I have for housekeeping. I will pass it over to Matt.
Okay, so we're going to start out going through some of these sections. We'll start out with exempt sales. Andrew and I will be passing this back and forth. So let me cover this first section, exempt sales and nexus. And really, anything related to tax always starts out with nexus. We began many years ago. This is where I was very familiar in the early days dealing with customers that would open a new office or have a warehouse somewhere. As we got into kind of drop shipping and e-commerce, things were stored at remote warehouses. Nexus in the original days is all about having somebody or something located in a state. You had a physical presence in that state, something tangible, something people could touch. This is something where it started to get kind of shaky over the years and expanded in scope to include if you had contractors. Then it became, in Texas, there were some examples of companies that were being checked on because they weren't registered in Texas, but they're participating in a number of trade shows in Texas. And Texas was kind of aggressive about tracking those down. So what we saw is if you had enough salespeople in the state, maybe you were doing on-site warranty work on machinery, things like that. You had people in that state doing work, you probably had to register. So that's where we started with Nexus. But then it changed over time. This is something we had been debating for probably since the early 2000s. 2003, 2004, we started kicking around the idea of everybody registering in all the states. How do we make this fair? We started going down the path of the streamlined sales tax. It was a grouping of states that said, let's unify our laws, make it if you register in one state, you register in all the other states. But even that didn't work out because we had situations where states just didn't want to have rules dictated to them by other states. You know, the big states, California, Texas, Illinois, New York, never wanted to join that coalition. So it ended up getting pushed all the way up to the Supreme Court with the decision of South Dakota versus Wayfair. And that's where, you know, you might have heard of Wayfair. They do a lot of commercials on TV, having furniture. And what it was is they were drop shipping furniture into South Dakota. And South Dakota said, look, you're doing enough business here. You should be registered. And so what they decided on is let's make some sort of economic nexus. Your company is doing enough business in this state, so let's have them register. But the nice thing about that was they left it up to the states to decide what was important. What are the numbers that should be tracked? How is that meaningful? So as we look at the map of the United States, you know, the numbers vary. In the first 6 months, maybe first year and a half, through that time period, there's a lot of changes, people trying things out. But came down to a commonality. Most states went with the limit of saying, if you're doing over $100,000 in business in the state, you probably should be registered. There was concerns over small businesses, like think about your sellers on eBay or Etsy. They don't want to register in all those states, and it becomes more of a burden for the states, for the individuals to register. So in those cases, we look at it and we say, here are the thresholds. Some states went down a path based on number of transactions, how many invoices relate to that state. And so things change, but overall what we're looking at is most states, if you're doing over 100,000 in transactions in a year, and again, these things are defined by the state. What exactly is a year? Is it calendar year or is it a 12-month period? Again, it depends on the state. But for people selling larger pieces of machinery, for example, I was working with a client that sold tractor trailers. The average tractor trailer, once you start throwing in accessories, it's going to break $100,000 in sales. And they would take that truck and drive it and drop it off in that state. Well, every time they sold a truck, they normally crossed that threshold and became just advisable for them. Instead of trying to figure this out on a month-by-month basis, just register everywhere and try and do sales everywhere. Certain states don't have sales tax, so we don't have to worry about those. Some of them have really unusual limits, so we can take a step back from those, but it does vary. Now, when we start talking about exemption certificates, going back to a manufacturer point of view or distributor point of view, we've had a lot of people look at this and say, look, I sell a lot into this state, but all my sales are exempt. And so then we get into how do you evaluate exempt sales? And most of the time, the states are going to say, we want to look at your total sales numbers, not what's taxable and exempt. What are the total numbers? But then we're going to have some areas where they say, only count the taxable sales. Once that crosses the threshold, then you have to register. And again, with certain manufacturing, you might just find it easier to register in every state and file $0 returns because, yes, you have sales there, but they're all exempt. So you show $1 million in transactions, $1 million of exemptions supported by exempt certificates, and then $0 sales tax collected, $0 sales tax paid to the state. But as soon as you start doing that, you're open for audit on proving that $1 million of sales was exempt. Now, this ties into that problem. Do you include or not include those exempt transactions? But the real pain in this problem is registering in every state. Registering could be as simple as filling out a quick form. What's your federal ID number? What's your corporate headquarters? And then agreeing to, file sales taxes on a monthly, quarterly, or whatever basis. Registration in those states is easy. Other states, it's like they want to know everything about you, everything about your back history of the business. What sales have you done in the state in the past that you may not have reported? So registration can be tricky. And then there on top of that is the ongoing process of monthly filing, quarterly filing. Again, if you're doing $0 returns, after a few months of that, you can appeal to the jurisdiction and say, look, I don't want to be filing $0 returns monthly. Can we move this to quarterly or even annual? States will normally listen to you. Again, it's less work for you, but it's also less work for the states to check in on you. Now, this final piece, state by state rules are just something that we have some great software at Avalara to help people understand these rules, help them register, but keeping on top of them can be difficult. The more states you register in, the more rules you have to keep track of. Like I said before with streamlined sales tax, a lot of states try to unify their laws, but that's not always the case. States can change over time. We've had a lot of issues with states like Washington and Georgia that were technically part of streamlined sales tax. Their regulations say one thing, but then under audit, they're enforcing different rules. So what's the way to go? And that's where kind of learning about these things, attending webinars, what do we see as hot spots are good to know and good to understand. Now, as your business grows and moves into more jurisdictions, yes, that's going to add to this complexity. But as your business grows in general, we have new types of taxes. We saw a lot of people quickly during the pandemic flip to opening up new sales channels, a big push for e-commerce. Well, e-commerce isn't as straightforward as just selling stuff through your own website. E-commerce includes selling things through other people's websites. How is that taxed? How is that reported? We deal with a lot of issues such as marketplace fairness. These are laws that came up soon after the pandemic that tried to make it so if you're using somebody else's website, they're collecting the money, then the marketplace has responsibility for being registered and collecting the tax and remitting the tax. So some technical challenges there because technically it's your sale, but how do you report it on your return, if at all? So there's that. And the other thing of new products you're selling is another issue. Product taxability. Sometimes you're in kind of a fringe field of the medical industry. Some of your stuff fits into a medical category and is exempt by law. Some of it's not. And the hospital or medical facility would have to provide you with an exemption certificate. So just be aware that as your company grows, there's always going to be new challenges in tax. When we get to that very end, let's go back a couple of slides where I was mentioning you're doing a reporting in a state of $1 million in sales and $1 million of exemptions, zero sales tax collected. That opens you up to audit to say, hey, show me the exemption certificates that support that $1 million in sales being exempt. And so this is where, as a seller, it really comes down to you collecting those exemption certificates, documenting everything, making sure that when you get an exemption certificate, it really makes sense. Some of you might be selling to educational or nonprofit or religious organizations. You know, those can get kind of tricky. You're not dealing with an experienced business person that says, look, I'm buying this, I'm reselling it. They know they're exempt. A lot of times they're called an exempt organization. So they think they can buy everything sales tax exempt, which in many states they can't. They would be income tax exempt, but still liable for sales taxes. So understanding who can use a certificate and who cannot is going to be on you for accepting or denying those forms that you collect. So just know there's complexities to these forms and that you're going to have to know the background around them. Let's go into the next educational question here.
Thanks, Matt. So the second CBE question should be up on your screen now, and it is, what industry is your company? There's a bunch of choices. You might need to scroll down to find yours and then hit submit. If you don't see it listed, you can click other and then drop it in the chat to let us know what industry you're in. And we'll look at the results. And then in the next section, we're going to go through some exempt reasons and use cases that apply to some industries more so than others. So helpful to see what industry you are in. We'll give you a few more seconds to answer that, and then we'll look at the results. Okay, let's see the results. So we have quite a few people in manufacturing, software, wholesale, resale, distribution. So a good range of people on. So thanks for answering that second CPE poll question. I will move us on and hand it over to Andrew.
Thanks, Ashley. Appreciate it. Appreciate everyone answering the polls too. And based on the results, you know, some industries I see, it definitely aligns to probably high probability that you all have tax-exempt customers. When we're working with businesses, that's usually one of the first questions I ask is, you know, do you have tax-exempt sales? And typically it's, you know, yes, of course we do. 99% of the businesses I talk to do have tax-exempt sales. And then I say, well, what percentage of your business is tax-exempt? And then from there I can get an idea of, you know, who you all are working with. But typically when I see some of those industries that you mentioned, like manufacturing, wholesale and distribution, retail, chances are you are, going to have a good majority of tax exempt customers. And having said that, there are many reasons your customer or one of the businesses you work with could be tax exempt. And, the rules vary by state. Up on the slide here is just a few that we've mentioned. We'll cover the 4 in orange, but there's many reasons a business can be exempt, and it can vary by state. And that's what brings in complexity to it, because I'll talk to businesses and they'll say, oh, our customer told us they were exempt. And I said, okay, well, why are they exempt? And they're like, I don't know. They sent us their certificate. And I was like, well, what certificate is it, right? So it matters there. Why does it matter? Every state is different. You might have, you might be in Florida, hypothetically, and you might have a reseller, and they might provide you a certain form. But then a nonprofit in Florida, the state expects you to receive a different form from them. So that's why it matters in regards to, why a business may be tax exempt. And resale to me is what comes up most commonly in my daily calls. Like, to Matt's point, I've talked to thousands and thousands of customers in this space, and resale to me is the most common. But there's many other reasons too, like nonprofit institutions, like you're selling into schools or religious organizations, and there's of course governmental, like tribal organizations or federal government agencies, and there's also businesses that self-report, so they have direct pay permits. But we wanted to make sure we get the point across that there are more than one reason a business could be tax exempt, and that plays a lot into the forms you should be collecting from them, maintaining from them, and just gives you the ability to understand that not every tax exempt business is the same. And the first one we'll cover is nonprofits. Kind of self-explanatory, but certain nonprofit organizations can qualify for tax-exempt purchases, right? And then obviously, when you have these nonprofits, you shouldn't really be taking their word for it. Most states expect you to collect a certificate from them that identifies that they are a nonprofit. And again, every state's different. The forms vary by state. Some state forms are very simplistic. Some require a state issued form. So there's complexities there. And, we all know what a nonprofit is, but it does vary on a state by state basis, because schools in most states you would assume are exempt, but they're not always. And I know just over the years, certain schools that are nonprofit in California aren't necessarily tax exempt. And certain state schools and public schools in North Carolina aren't necessarily always tax exempt. So there's complexity there. And, you, as a business, you want to do your due diligence in that. And obviously that comes into play when you have different kind of customers. And obviously Avalara has solutions to help you with that, which we'll get into deeper. But, understanding who your tax exempt customers are, where they're located, matters, because it can really help you reduce your cost in collecting those certificates, and then understanding and knowing, when you report the tax you collected, and then understanding when you don't have to collect it and still report those $0 tax transactions, which Matt spoke to already. We see a lot of businesses that have usage-based manufacturing exemptions, meaning perhaps you're selling into manufacturing, but it may not be all used in manufacturing. So there's complexity there in regards to when you have a manufacturer, they're providing you their manufacturing exemption, but what's being used in the processing, what's being used in the manufacturing, what's being used in the production, the actual products that they're purchasing, or is it not involved in the processing? Is there something that they're using it, within the business that's not something that they're, pushing out that's part of the manufacturing? So there's complexities there. There also can be usage-based certificates where it might be based on a job, or specific to a purchase order. So a business you have might not always be exempt. It might be only exempt when they do a job-based usage work for the government. So another scenario that plays into different exempt reasons and why your customers may be tax exempt. And then resale, like I said earlier, to me, that's the most common use case when I talk about this all day long, every day. A big majority of our customers that have pain around this, collecting, validating, and maintaining exemption certificates, it's typically through resellers. So you're selling into resellers, they provide you an exemption certificate that gives you the ability to exempt in that specific state. But what I hear a lot is our customers that have a reseller will just mark that reseller exempt in their ERP, and you never charge that reseller tax. But the reality is you should only be exempting that reseller in the states you have certificates on file for them. So if we use that Florida example earlier, you may have a Florida reseller. They provide you their resale certificate for Florida to you, but what if you drop ship into another state, which we'll touch on a little bit deeper later on. But you shouldn't be exempting them if they ship to North Carolina because they provided your Florida exemption certificate. So there's complexity there, and you're going to have scenarios where you're shipping, of course, out of that reseller state, and that's just something to consider, because you want to exempt each customer based on the ship to state, and typically the forms are unique to those states. Of course, there are multi-state forms, there are streamlined sales tax forms, there are states that will honor an out-of-state certificate, but those are all just the different complexities that play into it that you need to be aware of on understanding who your exempt customers are and why they're exempt. And then the final topic we'll cover in regards to different exempt reasons is direct pay. And I usually see this a lot with big companies, your Fortune 50s, if you will, or other big business organizations where they qualify to purchase taxable goods and services without paying the sales tax, and they remit it as use tax directly to the state. So they're going to say, hey, don't charge me tax. I'll take care of it for you. Here's my direct pay permit. And again, those do differ by state as well. So some states will just, give the business approval, and then they, like on their own letterhead or their own internal form, that will forward that to their vendors so that you all would know to not charge your customer tax because they self-report it through a direct pay permit. So it just simplifies it for them and also for you as well. And your proof in this instance as to the state would be, hey, this customer is a direct payer, and we have the direct pay permit to back that up. So the different exempt reasons play into the different forms you could be collecting by state. It just gives you peace of mind to know that not every exempt business is the same. There's many reasons a business could be tax exempt. And I talked about drop shipping, and I think I'm going to pass that over to Matt now.
Drop shipping is a really complex area. This mainly deals with somebody like a distributor who doesn't keep inventory in place. They reach out to a manufacturer. That manufacturer produces it and then ships it directly to the end customer. They would invoice that retailer or distributor in the middle. The distributor marks up that price and sends an invoice to that final customer. When we talk about this, your position in this model can be very tricky. You might be that manufacturer. You might be that retailer, distributor that's in the middle. Just depends on your business, your situation. And what happens with these situations, we get a lot of questions related to drop shipments. Is it taxable? Is it exempt? Well, who do I provide the exemption certificate to? What state should it be for? And with these situations, there's so many variables. And each time we look at this, we want to kind of evaluate where everybody is located. In the example here, you can see manufacturer has delivery right to that customer. That retailer is selling to the customer. That's considered the first sale. The second sale is the manufacturer selling to the retailer. Now, let's look at it. You're a manufacturer. You delivered goods to that customer. Well, in your mind, the customer for you is that retailer. They're the ones paying you. They're the ones you're invoicing it. That retailer might be in one state. The shipment might be in a whole different state. When it comes to those, we look at and we say there are a lot of states that are willing to accept what we call a home state certificate. The retailer would say, look, I'm based in X state, and I want to provide this as my home state certificate, showing that I am a registered reseller in this state, and that the goods being delivered to another state, I am not registered there, but my home state certificate will cover that. In those situations, that's a lot of states that it does cover. There are going to be several kind of important states that don't accept that. California being the biggest example. If you're drop shipping into California, as a manufacturer, you're shipping goods to California, you're invoicing the retailer would have to actually provide you with a California exemption certificate, or you would have to charge them the California tax if you are registered in California. So that's something to be aware of. Now, different states have different rules. The situations can change. For example, if you're the manufacturer and you're in Florida and the customer's in Florida, it's considered a Florida transaction. So the retailer would have to be registered in Florida. But if you're in Georgia and the customer's in Florida, as a manufacturer, you're shipping from Georgia to Florida, then it's considered an out-of-state transaction. Florida will be willing to accept the retailer's home state certificate, wherever that may be. So they wouldn't have to register in Florida. So, like I said, there's a lot of variables to this, a lot of stuff that comes up with unique situations, goods moving from here to there. But really, these three-party transactions, and sometimes it can be more parties involved, but these can be very complex. And this is where we always say there are some tools you can get out there, some cheat sheets, but really it's best if you do the research on what's unique about your business, what are the products you're selling, where are the goods being delivered from, where is your warehouse located at the objects start, where do they end up, and what are the variables in there that might need you to charge the retailer tax? What can you do to accept an exemption certificate? So very complex. I'll pass this back to Andrew to cover expiration periods.
Thanks, Matt. So in addition to different exempt tax reasons and drop shipping that Matt just covered, guess what? There's even more complication to it. Some states have certificates that expire. And yes, it is different on a state by state. Also, as we touched on earlier, it can vary by exemption reason. For example, Florida resale is every year. Florida nonprofit is every 5 years. Why is it like that? We don't know. The states make it hard on purpose. They're trying to complicate this for you. And quite frankly, there's a reason Avalara has been in business for 2 decades because of the complexity. But it's important to know that when you collect a certificate, depending on the state, depending on the exemption reason, they can expire. And the states expect you to get new certificates and to have them on file and collect them before the old ones expire. They expect you to have a compliant, valid certificate on file at the time of invoicing. That's what the states expect you to do as a business when you have tax-exempt customers. And it's very challenging in managing and maintaining those expired certificates based on the states you're in. Some states don't expire. And we have a recommendation. We have always said, Matt and I, every 7 years, we think you should get a new certificate just to keep your records up to date. Typically, in an audit, the states can go back that far. I have heard states have gone back further, but it does vary and it depends on the state. But expiration dates are definitely something that comes into play in just the continual maintenance of always making sure you have good certificates on file. I did go to a trade show a month or two ago where somebody from a Big Four CPA firm, they recommended that their customers get and their clients get certificates every 3 years in the states that don't expire. So it's really giving your business peace of mind that you're collecting certificates that are always up to date. In this example, in the slide I'm showing now, is I see it all the time where businesses will collect a multi-state certificate, and our customers, our prospects looking into Avalara will send me these certificates, and I'll look at it and I'll say, okay, this is a good multi-state certificate, but they signed it on January 1st, 2020. So what that meant is, for a majority on the states on there, it already expired. Like Illinois for resales every 3 years. Alabama is every year. Connecticut's every 3 years. Washington's every 4 years. So even though you're using the multi-state form and they give you one, fantastic. But if they've given you one that they haven't updated or signed in 5 years, then that should be a trigger to you that you need a new certificate. And also,
Andrew, if I could jump in here for just a second, when you're going down that path of looking at that multi-state form, I love seeing the use of a multi-state form. It's an easy form for many people to fill out. But as an auditor, as a company manager, I don't like seeing those forms because then there's a lot more liability. Something to point out is in the state of Washington, when we talk about expirations, they are technically under the streamlined sales tax laws. Their regulations say that if you collect a certificate, it never expires. But in the fine print of the MTC form, it says if you collected their information on an MTC form, it's only good for 4 years. Other states like that, Nevada, technically they're good forever unless you get an MTC form, then it can be limited to a shorter period of time. So there are some nuances like that. And then you run into making it even more complicated. You have states that, like Washington, have issued letters, a resale letter that has a pre-printed date in which it expires. Some cases it expires annually. Normally when they first start a business, it's good for the first year, then it'll extend out to 3 years, even then 5 years. But again, they're streamlined. It should never expire. But our recommendation is if it says in that form, it does expire on X date, you have to use that form date and request a new one before that one expires. So MTC can get very complicated very quickly as auditors interpret the rules. You might be reading the regulations on when to renew things, but the nuances like the MTC form expirations or something maybe only the auditor knows, and you won't find out until an audit happens.
Yeah, exactly, Matt. Good point. And also I found too that businesses only usually ever see page 1 of the multi-state form. But if you actually look at the official form, it's like 9 pages. And on page 1, all the states have those different footnotes. And usually pages 2 through 9 of the official form are describing if and when the state will either honor that certificate and the different scenarios that you talked about exactly. Something under consider too about expiration date and exemption status, things can change. Like your customers, the businesses you do work with, they might be a part of an acquisition or they might be acquiring. So there's reasons to always collect new certificates, and it could just be your customer's business changed, the name changed, or like I said, there was an acquisition. So they could have, spun off a new business unit or a new FAIN. So all that can play into if and when you need to get new certificates. In regards to, I kind of touched on it before, like our recommendations on, best practices is we want you to, the states expect you to request certificates prior to invoicing. Like time and again, I hear, oh, well, I invoiced this customer with tax, and then 3 months later, they came back and gave me their exemption certificate. Well, that's a business decision. We would recommend that you charge them tax, you need to remit it. I know you don't want to upset your customer, but in theory, you should only exempt them when you have the certificate, when you validate it, and you know they're exempt going forward. Anything you do in the past, that's between you and the state. You could do a credit and a rebill. You could move it to a forward period. It's your decision on how you want to build that relationship with your customer. You obviously don't want to upset them. You're not trying to lose sales, but it's just things to consider that we always recommend getting and collecting certificates when you onboard the customer, before you invoice them, and then always maintaining new ones going forward so that you're always up to date. And obviously, Avalara has solutions that can help you collect, validate, and maintain those certificates. So I think that closes this section out, and I'll give it back to you, Ashley.
Thanks. It's time for our third CPE poll question that should be on your screen now. And the third question is, what is the biggest pain point in your current exemption certificate process? We have a lot of options for you to pick from, so make your selection and hit submit. If you are not seeing this pop up on your screen, try refreshing your screen, and that should get the question to pop up. So we'll give you a few more seconds to answer that question. And just to preview, we'll be going more in depth into the audit answer in the next section. Okay, so let's look at the results that we have so far. So tracking expiration and renewals that we just covered was a big pain point. And a lot of people, the most popular answer said all of the above. So we're glad you're here on this webinar to learn a little more about it. All right, on to the audit section. I'll pass it back over.
Yeah, that 0% result for people concerned about audits. But we'll cover this quickly so we can get into a quick demo of the software. But audits take place over time. I'm going to skip through this pretty quickly. But when you have certificates you're supposed to be collecting, they relate to sales, the auditor will normally do a sample period and review all the invoices in that sample period, looking for exempt transactions. When they find an exempt transaction, they want to see the related certificate. If you don't have that exemption certificate, they figure out the value of that certificate as it relates to that pool, and they multiply it across all the months that they're auditing for. So if they audit 1 month, they find you're missing 1 certificate. It represents a small amount of sales in that month, but then over a 3 or 5 year period, they multiply that out across all those months and suddenly turn into a big dollar amount. Once they start digging into this, what I've seen is it normally ends up being over $10,000. I've had a lot of clients in the $40,000, $50,000 range for missing 1 or 2 certificates during the audit period. I have other clients that have done a horrible job collecting certificates and face penalties in the hundreds of thousands of dollars. And on top of that, there's penalties, there's interest. So it does add up pretty quickly on what you owe. So when we look at what is the auditor doing, in that example, they are looking for to make sure that you actually have an exemption certificate on file. Is the document the right state? Has it been filled out completely? Common things somebody will send you a form, they didn't sign it, they didn't date it, at the very bottom. They just have a generic form they just send to everybody. The other pieces, they might not even have your seller name on there. Going back to what I said in the beginning, you might be dealing with exempt organizations. Those exempt organizations might send you their IRS form that says they're recognized as a 501c3. Well, that's great if the IRS recognizes them. That doesn't mean anything when it comes to exemption certificates. So there's a lot of things an auditor can look at on that form and throw it out. So what we want to do is make sure that when we're collecting a document, collect the right form, make sure it's filled out completely, but then the information they're filling in on there, does it make sense? Why do the auditors come in? And there's a couple major reasons for this. If you're registered in the state, some states have a mandatory policy of 100% audits, meaning that a business during its first couple of years of operations will get hit by an audit. There are certain industries that have requirements that say they must be audited every year to maintain their licensing. Registering new businesses, but also opening up, for example, you're starting a new location. Well, you got to pay your employees. So you register for payroll taxes, and somebody's scratching their head going, well, what about the other taxes? Of course, property tax, but also sales tax and business license. So somebody may look at that saying, well, they've been paying payroll taxes in that state for 3 years. Why aren't they doing anything sales tax wise? So just know that there are a number of ways. My friend that was an auditor, what she would do was she would go in, audit a company, and kind of while she was there, look at invoicing, see who isn't doing the invoicing properly, and then line them up for a future audit. So she would leverage one audit to gain access to information to provide her leads for the next audit. A lot of that has kind of gone away. A lot of times that was dealing with commission-based auditing, third-party auditors doing that. So just know that it can happen as you invoice people incorrectly. At Avalara, we've sat down, this is a big part of why we're here, is trying to prevent any undue audit risks. And you'll see we've done a number of studies. We talked about this as we were preparing for this presentation. What are the latest numbers? And we can pull this from year to year and see different trends, but you'll see even the numbers here, how many hours are you spending working with exemption certificates? What are the average penalties related to audits over time? And we're seeing numbers like this just go up year after year. So putting something in place always makes sense to make sure you're tracking everything properly.
And Matt, those, if you can go back to that slide, those numbers, that's a third party. Forrester did that for us. So, that's an independent study. We didn't control the study, but Forrester went out to businesses and clients we have and, obtained the data from them. So it's real life business data points.
Yep. Great point there. This is not information that we're just assembling for a presentation. This is actual research done by a third-party group. Yep. Thanks, Andrew.
Absolutely.
Well, you want to get into best practices and then show them a quick demo?
Sure. Appreciate that. So we covered most of this. You have tax-exempt customers. How do you collect, validate, and maintain the certificates? Well, what we see as a best practice is you have to have a process in place. Every day when I'm talking to businesses, they're like, oh, the sales team does it. Or, oh, customer service does it. Every business is different. Well, you just have to be confident that when you collect the certificate, A, it's valid, it meets the state requirements and the state needs, and you understand how to collect it, how to validate it. Who on your team is doing that? Do you trust them to do that, right? You typically want to have one source of truth where your certificates live, where you can maintain them. You typically want to understand when they expire. and you typically want to have a way to review them and, of course, automate any forward-looking processes that you may need, like getting new certificates when applicable. And then obviously, like Matt said, the point of this is to show you that we help businesses manage and maintain this process. We give you the software and the tools to help you with you and your teams to, again, collect, validate, and maintain certificates. And again, that's collecting from the appropriate state, the appropriate reason, and understanding on when those states expire, so on and so forth. And within Avalara's portal, the exemption certificate management tool talks to the tax engine, which can then talk to your ERP or talk to your e-commerce. So there's many reasons and many sides of a business we can help with. Many businesses we talk to have both an ERP and an e-commerce platform or their own financial system where you need to collect tax. And that's exactly what Avalara can do. And the exemption certificate management piece, which is Avalara ECM, that's one piece of the puzzle. In addition to the software, we have services that are available. So in addition to using the software, if you all need help on the business side to collect, validate, and maintain the certificates, we have a managed services team that you can outsource the work to, where they can validate certificates for you on your behalf, new ones that come in or existing ones you have. They can also connect to your end customer and reach out asking for new certificates. They can even send postal mail letters asking for new certificates. And the managed services team can help you, in one-time big projects, or can help you in ongoing projects going forward. And hopefully we'll have some time here to dive into the software really quick, but that's essentially what Avalara can do. And I'll pass it to Ashley for the last question for CPE credit.
Fourth and final poll question should be on your screen now. If you are interested in hearing from an Avalara sales rep on how we can help you solve these problems, you can hit yes, and we will follow up with you. This is the fourth and final one, and the timer is a little shorter on this so we can get over to the demo. So make sure to get that answer in if you need CPE credit, and I will pass it back over to Andrew.
Excellent. I'm going to share my screen, and we will be looking at the Avalara portal. Just let me know if you can see it, Ash.
I can see it.
Excellent. This is Avalara's portal. And, to level set, Avalara is a global end-to-end sales tax compliance solutions provider. Today, we just focused on one piece, which is exemption certificate management. And this is the Avalara portal. And having said that, being a global end-to-end sales tax compliance solutions provider, we have many solutions. Our three core solutions live right here. This is the tax engine. This is what you would connect your ERP to, or your e-commerce platforms, your custom financial systems, so we can give you the applicable tax. Once we give you the applicable tax, we can, of course, file and remit your returns. And then on top of that, if and when you have tax-exempt customers, we, of course, can help you, give you a solution to collect, validate, and maintain those certificates. And that's where I am now. I'm on the exemption certificate management homepage. A couple of people were asking in the chat, well, does Avalara help you know when they expire? Absolutely. And that's exactly what the insights section and the task section give you a snapshot into. This insights section is a single window pane view looking into all my exempt customers, the data records that live in my system, and then giving me back data points that matter, like what I have that's valid. Of course, the green section of the circle. And as a business, in order to maintain your compliance, you want to keep this circle as green as you can. And that's what the software gives you guidance on. And then same with the tasks. Software is telling me, here are certificates that are expiring soon. So as we've already reviewed, you want to make sure you get new ones in place before the old ones expire. So there's tasks setting me up for success. And of course, within the software, I can complete these tasks. But we did have some questions asking about, what states or whatnot. When you sign up for Avalara, you get all our content baked into the software. Like people are asking about specific states. Well, we know the forms, we know the states, and you can drill into any exempt reason. Of course, there's many, we just learned that. So I can look at resale, and our system will automatically have our default forms, and it will have the default expiration. For example, resale for Arizona is the 5000A. Every state's different. Like we identified, resale in Florida is every year. Connecticut's 3 years. Idaho is 3 years. Illinois is 3 years. And you can see the different forms that may apply by state and the different expiration dates. And like we said earlier, some don't expire. It will start with our default, and you can edit this any way you want. Just know that you can update this if you have your own business rule. Like we reviewed, if you want to get a California certificate every 5 years, and that was just something you would come in and edit it. So even though our software starts with our defaults, you as a user can edit that. But real quickly, and we don't have much time left, I want to show you how easy it is to get certificates in the system. I have my customers loaded already. Let's look at a new customer. So here's a brand new customer. I have that customer data we've referenced. You've either would import this in or enter it one at a time, or you could push it from your ERP. But just real quickly, Ash, I'll show the validation tool that we've built in. I have a certificate for this customer, and I want to load it in. What do? I literally can just drag it into the system, and I'll do that right now. I drag and drop it in. The software is now scanning this certificate, and it's doing its best to read it. It's using the AI-assisted validation that we built. It's trying to scrub and read that form, and if it can, through optical character recognition, it will pull off data that matters. So in this case, it's looking for what states, the ID number, the sign date, so on and so forth. And you see it did that while it was talking. So remember, this is a multi-state form. This business happened to fill it out for 20 states. Look what the software did. It pulled off all those states. So if you ship to these states, for this customer, we know we have the certificate. And of course, as the user, you could edit this. So like if you're not ever going to ship to them in North Dakota or Idaho or Utah, for example, you could remove that. And one thing I want to point out is somebody asked this earlier. It says the effective date is January 1st, 2020. Well, why would it do that? Well, because that's the date they signed it. So that's the reality on the legitimacy, if you will, of when this form started. And of course, the software knows there are states that expire. For example, we've talked about Connecticut. That expires 3 years. So that's why this certificate for the state of Connecticut is already expired. But my point is showing you is you don't have to be a tax expert. You load in the certificate, the software can read it, gives you a result, and then you as the user just give it the final review and the final save. And when I do that, of course, this is a multi-state that was applied to many states, I can save it. And now that certificate lives in the ECM software underneath that customer record. So now the software knows, here's the states you have certificates on file for that customer that are valid. Even though it's a multi-state, it applies it to the states that it was filled out for. And it shows you which states are expired. So you know how to manage and maintain certificates for this customer within the tool. And of course, there's additional automation you can turn on where the software can email your customers prior to expiration just by turning on some settings here. Emailing prior to expiration to control that. So didn't have much time, but high level, the concept of the software is designed to be your single source of truth that gives you the ability to collect, validate, and maintain those certificates. It just gives you peace of mind that you're collecting them and you have them in a forward-looking fashion. Try to squeeze that in as much as I could in a few minutes. Obviously, there's a lot more that goes into it, but appreciate everyone's time.
Yeah, thank you, Andrew, and thank you, Matt. If you answered yes to that poll question, we will follow up and we can get you in contact with sales and get you a more in-depth demo if that's something that you are looking for with this webinar. So we are at the top of the hour and don't have time for Q&A, but I know Matt and Andrew were able to answer some throughout the presentation, and they've been answering some in the chat. So just want to thank our presenters again today. And to close out, if you qualified for CPE credit, you can download your certificate now in the CPE certificate engagement tool. Your certificate will also be sent to you in a post-event email later today if you don't have time to download it right now. In that post-event email, we'll include a link back to this console to view the on-demand recording, get the slide deck, and get those additional resources. So thank you again for joining today's webinar. This concludes today's event.